Good afternoon, everybody. My name is Lennart. I'm heading strategy and business development at Kreditech, and I want to start the presentation with a big number: 4 billion. There are 4 billion people on the planet who have no proper credit score. So that means they're structurally excluded from consumer finance, consumer credit. That's simply because obviously banks use this credit score as the basis for their credit decisions, and if there is none or just a bad one, they won't extend it. So what did Kreditech do? Kreditech built an online lending company with an own book, so we're not a P2P platform. We're giving out credit ourselves. We're underwriting the people ourselves. We're using big data algorithms and predictive analytics to come to a decision about the credit worthiness ourselves and grant the credit then as well. Last year, we've seen 41 million in revenues, are growing roughly 100% per annum, are in 5 markets right now, distributing either B2C or B2B2C, I come to that in a second, and have so far seen 2.5 million applications and granted roughly 700,000 loans so far. On the capital side, we've raised a bit over 300 million euros. The last round, Series C, coming from Peter Thiel and JC Flowers in September last year. And now the IFC actually invested as well, and I want to single them out as an investor because as we are talking about financial inclusion, we shouldn't underestimate the power that comes from the World Bank here, where we hope that we get financial support, network support, and also market intelligence in the countries we operate in. Let's talk about the segment we are targeting. I mean, if you look at the customer segments there is in consumer finance, everything ranges from like the pawn shops around the corner to prime consumer loans. In the middle, you have like payday lenders and credit cards, but then you have a big segment in the middle which is basically untouched simply because the prime suppliers of loans can't score the guys and they don't want to bother with them because the loan size is too small and therefore the unit economics don't make sense. And the payday lenders are obviously not sophisticated enough to actually assess the credit worthiness. So here we have a big untouched segment which we target with loans up to 5,000 euros up to 48 months. And we use that technology to actually do that. What do we build? We're building a proper digital bank on a product side as well as on an operational side. And I want to quickly lead you through the way from customer acquisition to the final product. So we acquire customers through 4 channels, or are just about to do so. Obviously through online and direct marketing. Second, through point of sales marketing. So we are cooperating with different PSPs and e-commerce stores to be integrated in the checkout process. So we are basically another payment method. We are buying rejected leads from other banks and lenders, and through a to-be-launched personal finance management tool, we attract the customers to not just manage their finances, but also to actually go and take a credit with us. Credit products, we have installment loans, revolving credits, and microloans, and then obviously they're being made captive in our digital account 3.0 through the personal finance management platform and an e-wallet with a prepaid card, which we are just about to launch. And if you look a little ahead in our vision, we will have a platform which is separated in 2 parts. First, our own products, and the second part, our third-party products which we would never create ourselves. On the other side, on the back end, if you want, we have a let's say classical operational model which we try to automatize to a full extent. Roughly now, we have 70% of that automated already. We are in five markets. Not sure where the rest of the world is, but it's Mexico, Spain, Poland, Czech, and Russia, countries where the credit data availability is pretty bad or not existent at all. Now the big question is, what do we actually do with all the data? I mean, we're collecting up to 20,000 data points per application. That ranges from publicly available data, public services, web search, geodata, telco data, blacklist data, payment data. We acquired Contomatic, who was also represented here in the room last year, who we use to actually zoom into the bank accounts of the customers if they have one to see their transactions. We look at the behavioral data, so we know if you're under influence, if you take drugs or alcohol, if you apply with us, because we are analyzing your mouse movements. We are looking at how many seconds you actually need to fill out your name. If you correct yourself, you make mistakes, how long you read the terms and conditions, and so forth. We bring these data in a logical ratio to each other, and then we derive at a credit score, and we iterate this process over and over again. And here you see the evolution of loan loss rates over a certain period of time, and you see that they go down over time as we learn and improve the models. Now let's have a look at what does that actually mean on a return basis, right? What's the value proposition we have here for the investors? Now, obviously, we are looking at the ROI, and obviously I didn't put numbers here, but you see the ratios to each other. We have in gray the baseline. So if we only went and gave out credit, just for gut feeling, or based on gut feeling, we would make a significant loss. If we use credit bureau data only in those very countries, in the segment we're operating in, we would still make a loss. If we used big data only, we would be in the far positive. However, what we do is we combine big data and credit bureau data and therefore derive at a far higher ROI in this very segment. Let's now have a look at the value proposition for the customers. I mean, if you compare the banks with us, we see that theoretically everybody could get a loan from us because we could simply score everybody even without a credit score. Availability, banks are usually available 9 to 5. We are available 24/7. So if the farmer Pablo in Mexico wants to have a loan of 2,000 euros at 3 o'clock at night, he will have it in 10 seconds on his bank account. Credit decision is made, here it's 35 seconds, we actually improve that to 3 seconds. Banks need up to 7 days, payout times 15 minutes max, and the bank takes at least 1 to 3 days. So here we have a clear customer-focused value proposition. So to sum that up, what do we have? We have a company that is still growing by 100% per year in super deep markets with a sheer unlimited potential. We are a proprietary technology that is world leading in its way to score the unscored in every single market globally. We're a product suite that is covering all consumer finance needs, from the loan to a PFM to the e-wallet. We have top-of-the-class satisfaction metrics proving that our customer and product fit is outstanding. It's roughly 70 to 80% on the NPS level. And last but not least, we are backed by investors like Peter Thiel, JC Flowers, and the IFC, which not only have super deep knowledge of the consumer finance market, but also have super deep pockets, which we need to conquer the space in the future. And that's actually our aim. And I thank you very much for your attention, and I'm looking forward to your questions. Thanks.
So let me kick off. It's interesting that you looked at the emergent markets. I'll just quickly, do you see this model becoming a mass market thing into more developed world?
If we expand it in more
into larger markets.
Yeah, I mean, let's be frank. We looked in different markets. We just paused 4 markets. We had Peru, we had Domrep, Kazakhstan, Australia, but we purposely paused them because we wanted to go market penetration rather than market expansion for the next 18 months roughly. We prepared Brazil. We could launch there basically tomorrow, but our strategy right now is to focus on the markets we are in, where we have a leading market position. Want to expand that also through what I said, the new angle of being included in the checkout process of big e-commerce stores, and therefore basically providing consumer finance for the unprivileged banked in more emerging and developed markets.